Do you want to start investing in the stock market? In this video, I'm breaking down how you can start investing and making money in the stock market. Coming up. Hey, this is Carlos with Influential Finance. In this channel, I make weekly videos to help you improve your personal finances. So if you're new here, consider subscribing. Today, we're talking about the stock market. Now, I can talk about the stock market for hours, but for the purposes of this video, we're talking about the following topics. I will first talk about what are stocks and why companies issue stocks. Then I will discuss how you can buy stocks, make money from the stock market, and lastly, some of the risks involved with investing in the stock market. So, let's jump into the video. So, let's start off with the basics. What are stocks? A stock represents partial ownership in a company. Now, this doesn't mean that you can go into the company and do whatever you want, but it does give you a claim in a company's future earnings. The value of a stock is dependent on the valuation of a company or the market cap and how many shares a company issues. If company A is valued at $100,000 and they issue 1,000 stocks, each stock would be worth $100. As investors buy and sell the stocks in the stock market, the price of the stock will fluctuate. Here in the United States, there are two main stock markets, the New York Stock Exchange and NASDAQ. Although in the early days, stocks were traded in person physically, almost all trades now are done electronically. Companies issue stocks as a way to raise capital for their operations. The most common way for a company to issue stocks is through an initial public offering, or IPO for short. A company can raise capital in order to finance a major project instead of borrowing from a bank. From the perspective of you and I, being able to invest in a company's stock allows us to participate in the growth of many companies. So that brings me to my next point. How can we make money from stocks? We can make money from stocks in two different ways: stock appreciation and dividends. First, let's talk about stock appreciation. Stock appreciation is when a stock you own goes up in value. To give you an example of this, at the time of recording this video, Apple stock is trading at about $120 per share. And by the way, if you hear me say the words share and stock interchangeably, keep in mind that they mean the exact same thing. One stock is the same as one share. If you buy one stock of Apple for $120 today, and 3 months later, that same stock is trading at $150, you would have made a total of $30 per share of Apple that you own. This represents a 35% return on your money as opposed to your typical 0.1% interest rate that you would get if you had your money just sitting in a savings account. At that point, you can make a decision whether you want to continue to hold on to your shares of Apple, or you can sell your stocks and cash in your earnings. The second way that you can make money in the stock market is through dividends. Dividends are simply periodic payments that companies make to their shareholders. Companies make these payments as a way for them to give a portion of their earnings back to their shareholders. Typically, dividends are paid out after a company releases their earnings on a quarterly basis. So by now you may be asking yourself, how do I buy stocks? We live in a very technological world where buying and selling stocks can be done with just a few taps on our phone. There are many financial institutions that will allow you to open up a brokerage account. Now, keep in mind that they do not pay me to say this, but I believe Fidelity Investments has some of the best service by far. Another popular app is Robinhood. However, Fidelity is my personal favorite because they have many financial advisors that can help you as you get started. After you open up a brokerage account, you should be able to start buying and selling stocks. One thing to keep in mind is that stocks have a specific symbol that identifies them, called the ticker symbol. If you would like to find a specific ticker symbol for a specific company, you can just use Google to find that. Speaking of ticker symbols, please make sure you are being very careful with this, because two completely different companies can have ticker symbols that look very similar. The number of people that confuse stocks because of a similar looking ticker symbol is mind-blowing. To give you an example of this, Tesla's ticker symbol is TSLA. This ticker symbol looks very similar to TLSA, which is not Tesla. TLSA is a very small biotech firm. Many inattentive investors bought into this stock thinking it was Tesla, which caused their stock to go up by 300% in 2020. This also happened with the video conferencing app called Zoom Video, back when they went public in 2019. There was another company called Zoom Technologies which was confused with the Zoom Video app when Zoom Video first went public. This simple mistake drove up the stock of Zoom Technologies by almost 5,000%. So as you start your investment journey, please pay attention to what you're buying. Now, this would not be an investing 101 video without talking about risk. It is very important to keep in mind that investing can be very risky if you don't know what you're doing. For any investment that you make, there is always some possibility that a company that you invest in can go bankrupt and you can lose all of your money. This is why it is important that you consult a financial advisor that will be willing to walk with you and ensure that you understand what you are investing into. The stock market, although you can make a lot of money in it, it is very volatile. However, there are many things that you can do to decrease your risk, such as diversification and education. Ensuring that you are diversifying your investments and educating yourself can go a long way in reducing your risk. As you begin your investing journey, always remember that investing in the stock market does not need to be intimidating. The more you familiarize yourself with the stock market and how it works, the better you will feel when making investing decisions. Your financial decisions should be based on facts and long-term results, not media hype and the fear of missing out. I'm not sure who said this quote, but it summarizes investing in the stock market really well. Time in the market always beats timing the market. Therefore, the amount of time that you are able to keep your money invested in the stock market is far more important than trying to get in or out at the right time. And that's where I'll leave it for today. If you got any value out of this video, please make sure you hit the like button. It greatly helps out my channel and it helps my content reach a lot more people. If you want to learn more about improving your personal finances, make sure you click the subscribe button and turn on notifications so that you get notified every time I post a video. That's been it. I'll see you in the next one.